All right, YouTube, welcome back here. We're back in action, and we're looking at a company here that caught my eye. We're looking at Churchill Downs, ticker symbol CHDN, listed here on the NASDAQ. Stock right now, $133.84, up about 57 cents here, a little over 0.4% here on the day. And as we see, we're about 16, 17 points away from the 52-week high. This is a 5-year chart you're looking at right here, okay? And as you see, the company has been doing absolutely phenomenal. And we're seeing increases in revenue in companies in this sector. This is a company that deal with horse racing, online wagering, gambling, and whatnot. And you can see that. You also saw the jump in revenue come into companies like DraftKings, right? DraftKings used to do $400 or $500 million a quarter. Last couple of quarters, they're up to $700, $800 million. Now, I understand they're kind of like still spreading their footprint and they're signing these new people with the DraftKings Sportsbook and all that nonsense. So I understand that they have revenue, coming in from multiple streams. But more importantly, what we're seeing here is the overall trend, right? And the trend, over history, what I saw, in my opinion, and of course what the stock market reflects, is that during a recession or a rough economy and all this, the companies that usually do well would be companies like Churchill Downs, obviously, wagering, betting companies. I want to say DraftKings, obviously, in theory, but of course, I've laid out how I feel about DraftKings. I think it's tremendously overvalued right here. I mean, they brought it up above 30. Now they're keeping it there. It's just a little bit of an extreme run, in my opinion. But more importantly, moving on, of course, you have tobacco companies like PM, which has been rallying as of late, got to that top trend line that we spoke about. Company was in a symmetrical triangle for I don't even know how long, and then it just decides to break out and kind of chill out at the top trend line. However, of course, we are seeing pumps from the overall indices as well over the last couple of weeks, so that's definitely helping it out. But more importantly, moving forward, if we are dealing with a rougher economy where this is only the beginning and it's going to get a lot worse, then again, what you're going to see is stability in companies like Churchill Downs, companies like PM, Philip Morris, again, that's a tobacco company, or companies like Constellation Brands, STZ, right? It's going to be alcohol, tobacco, and gambling, really, right? People are going to go for their vices because at the end of the day, it may only take a couple of bucks to enjoy some of these things. And when times are rough and you could literally just get by and you have only a few bucks to spare, you're going to spend it on something that you're going to enjoy so that, you probably don't have a nervous breakdown and start to realize how shitty everything is, right? That's kind of human nature if you think about it. So that's why over these years, even if you go back, obviously, 07, 08, 09, when the housing market and everything got turned upside down, you saw the stability in these types of companies, So, that's basically common sense. But more importantly, the company has actually been doing very well, right? If we come back here, first of all, the company recently announced a 2-for-1 stock split, which is absolutely phenomenal, usually a very, very good sign. And supposedly the old adage is that when a company does a split, it goes back to where it was before it split. So, you can put that on the back burner. But again, more importantly, you can see, look at estimates coming in here, about $800 million. And then if we go back before, the company's earnings have been doing relatively well. But you can see down in the fives, the 400 millions, and here was, the high 300 millions. Back up. Looks like that's one of their better quarters there, the June quarter. And, of course, end of the year, everyone trying to roll the dice and end the year profitable. But you can see, again, 3, 4, maybe 500 million, and now estimates are coming in 800 million, right? So the company has kind of been, in my opinion, kind of just consolidating into like this downward channel here since last earnings, which, of course, was a great beat on the top and bottom line. Look at that profitability coming in 13% above analyst expectations. But right here, kind of approaching, it's technically not the apex, and it would be early. However, again, if the stock is consolidating here and just gearing up to take the next leg higher, if I have expectations jump from 500 million and change up to 800 million, and then the son of a bitch comes in and they post like 819 million or some crazy shit like that, then obviously, in my opinion, the stock is going to break out of this channel and start to climb, and obviously climb and touch up these next fib levels moving forward. But could definitely get back to, 140 and change. So you're going to see 10, 12 point move. So yeah, we can probably see at least, I want to say, maybe even a 10 to 15% move here Not immediately, of course, because the company does pay a dividend, so sometimes they don't pop them as much as high growth stocks. But I do believe that we are going to see, I think we can see a clean 10-15% coming out of this. And again, earnings coming out July 26th. But overall, 10 billion market cap. We have a PE of about 18.5. Again, dividend yield about 0.25%, earning over 7.25 per share. The PE 18.5, again, in a sector like this could be considered relatively low. And, that can get up to 20 plus, which is why I'm saying the company is probably going to continue to climb. And again, looking at a 5-year chart, again, you can see pre-COVID, crashed down, and then has just been absolutely climbing and stable since then. So, that, in my opinion, that's why I think we're just going to continue to climb. Look at this. Nice climbs here, nice climbs. Revenue, 1.8 billion for the year. Market cap, 10 billion. So they're trading about 5.5 times annual revenue. However, the forecast, again, the next quarter, going to be a huge jump in expectations at 800 million. But more importantly, if we look at the forecast here, nope, I clicked on the wrong thing. The financials look good, though. If we check here annually, and we can look this column right here, 2022, you can see the PE has significantly pulled back. It's only about at 18.5 now, relatively low, going back the last 4 or 5 years. Price to sales sitting at 4.5. Okay, it's kind of mid. Price to cash, 15. Price to book, 14. So higher than it was years ago. However, compared to where it has been trading since COVID, which essentially was their business breakout, trading relatively low over the last, compared to the last 2 years. Enterprise value keeps climbing. It's about 25% higher right now. Market cap's about 10 billion. We're coming down here. Look, see, you can see the increases, the increase in the gross margin percentage here, going from 18.33 up to almost 28 to almost 31.33. Operating margin sitting here at 22. But it has climbed year over year. This is the current year, but of course we're only halfway through it. EBITDA, you can see, 16.75 up to north of 26, up to 28.8. And the net margin percentage, again, a little over 15.5%, climbed to north of 24.25%, on pace for about 27-28%. So the company, all of the financials, all of those metrics are heading in the right direction. And what happens is, obviously, the yield, the dividend yield is going down because the price of the stock is going up and basically appreciating more than the increase in dividend price, right? So you can see they're doing about 2. That was a 3-cent jump going from 33 to 36. But before that, consistent 2-cent jumps here. That was a 3-cent jump right there from 2016 to 2017, excuse me. But it looks like the company will continue to increase dividends. And here we go. If we look at the forecast, just look at how profitable they're projecting this company to be through the 23s, 4s, and 5s. And then if we switch over here to the revenue, you can see the jump that they're anticipating for this current year, 2023, going from 1.8 billion up to north of 2.5 billion. And then moving forward, they're touching 3, and then they're up to 3.25 billion. And again, if times get even harder than we anticipate, again, there's just a forecast. So if times do get more rough and more bets and more wages come in on horse racing and even on whatever, the NBA, companies like DraftKings, like I said, these are going to be the companies that are going to benefit, even though times are rough and no one has much money. But I really like those projections there. There's the revenue coming in. You can see gaming, live, historical racing, right? So, this is what the people want. We have these vices, and that's what I'm talking about. The gambling, the tobacco, the alcohol companies. You can see a big jump in debt, more than doubled, going from 2 billion to 4.65 billion. But again, I just really don't see it as an issue for this company. Short-term liabilities outweighing short-term assets, but overall, I believe assets are outweighing liabilities. Yes, assets are outweighing liabilities by about $500 million. And you can see, yeah, they are holding some debt. They are holding some debt. Look at the book value right there, 737. But again, all of these companies are trading at insane price-to-book ratios. But this company is actually consistently growing. And again, in this rough economy with this rough storm ahead, this may be one of the few safe havens out there that continue to do well and continue to grow. Operating expenses increasing a little bit. Got some slight cash flow here. I like it. There you go, 4 beats in a row on the revenue side. Again, just a slight miss there on the profitability side for 2022, but the company really looks slated to be doing bigger and better things. And that's why, again, with this downward channel taking place here, coming off of this very nice earnings report, as we see here, the stock popped, going from like the 130 level, jumped back up to 150. So that was a 20-point pop. So again, I was being conservative, talking about 10%. That would bring it to, maybe we can call it 145, 146. But the stock can easily pop back up to 150 if these numbers really come out well. But again, that's why I always say it always comes back to the numbers. It always comes back to the numbers. So if you want to potentially, in the short term, position yourself in this stock, 132, 133, 134 here, and it has a slight rally to top trend line, potentially a slight breakout. If you do want to take the money and run on the earnings, then of course that is entirely your own prerogative, totally understandable. That's one of the oldest strategies in the book. Wait for a company to dip down. When you see earnings coming up, you buy the dip, you catch the rally going into the earnings, and you sell before earnings. And history usually shows that, overall you would be up, 10, 12, 15% overall for the year if you did that, as opposed to if you held through earnings. This was a while ago. I remember seeing these numbers, but I think if you held through earnings, it was something like, you only ended up clearing like 1.4% or something, right? Because earnings are so unpredictable, we don't know. But again, with the way they're growing, with this jump in expectations, they have to assume that they're going to get close or potentially over this number. So, again, I do like Churchill Downs, especially more in the long term, but of course I'm just talking here in the short term about this potential pattern, and with earnings coming up, obviously it's a short-term immediate response. But overall, in the long term, as we see here, 5-year chart, all chart, right? I mean, there's a company that they're taking to the moon, as the kids say, right? So, one day you're going to wake up over here, end of 24 going into 25, maybe the stock's going to be 190. So you're going to see, a 50% move in the principal, plus you're getting paid a dividend the whole time. I mean, there are worse stocks to own. And again, if the recession does hit, it's going to be companies like this that are going to consistently generate revenue through the rough times. So that's why I wanted to bring it to everyone's attention. And here on stock charts quickly, you can see RSI a little below 47.5. The stock right here actually looks like it's forming a bullish hammer right now, and it's stopping right there at the mid-Bollinger Band of about the low 134s. MACD looks relatively flat. Obviously, we have our moving averages slowly climbing. So now that too. So if you think about it, if you buy here 132, 133, 134, and the company happens to report shitty numbers, you may only drop down to about 120 and change, and then bounce off that moving average, maybe remain relatively flat. Random ad. We switch over here to the weekly, and you can see, look at the 50-day moving average has been climbing now at that little over 118 level, right? So now you got the 200-day on the weekly at 120, you got your 50-day at 118, and obviously if we liked it at 130, we're going to love it at 118 or 120 or whatever the heck, even the bottom Bollinger Band, 116.69. Of course, that's going to suck in the short term, right? Because you're going to take, like a 10% hit or something from this current value. However, if you do like it in the long term, that would definitely be another opportunity to add to your position. But you can see, going all the way back, basically since the bull drop, the company has been, even before then, the company has been very strong, consistently bouncing off, and staying around, at least, off of this mid-Bollinger Band here. So that's going to be our point of watch, which of course is basically the middle of this downward channel. So, only time's going to tell. Again, it's going to come back to those earnings. RSI in the weekly, 53 2/3. MACD looks like it's slightly slipping down, but again, I have a feeling that it's just kind of gearing up to take that next leg higher. But, this was something that I liked, but, I'm curious to see what you guys think about it as well. Do you think I'm on the right track here? Do you think we found something that, is definitely going to be a buy moving forward, even if the economy gets rocky for us? And do you think that this company is going to beat these expectations? Again, last couple of quarters, mid 550s, 480, 380, 800 million. So let me know down in the comments section below if you think this company is going to be able to show us some action here in the short term, or if you think after this stock split, this 2-for-1 split, that the company is just kind of going to hang out, potentially sausage, as they say, remain flat for a little while, and then take the leg higher several months down the road. I'm very curious to hear what you guys think about this one as well. But me personally, I like it. And again, I see it in the downward channel. I see these big expectations coming up, so I wanted to bring it to everyone's attention. And I'll end it there. So once again, stocks by the numbers. Thank you guys for stopping by. Like the video, thumbs up, helps out the algorithm, helps me get more eyes on the channel. Subscribe to the channel. That is our handshake agreement. If I see something I like, I'll make a quick video. If you ask me about something, I'll try to take the time to review it. If you're in the Discord and you want potential short-term call-outs or whatever, if I see something setting up, I'll try to mention something. And I'll do all of that. All I ask is that you guys push the subscribe button. That is how you help me help you. But moving forward, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I want to wish everyone success. I hope everyone makes a couple of dollars. Thanks for stopping by, and I'll catch you guys in the next vid. Have a good weekend.